Good morning, guys. Good morning, good morning, good morning, everybody. How we doing? Good morning, everyone. Hope all is well. Give me a sound check. Give me a mic check. Let me know if everything is good. How's everybody doing? Mic check, sound check, good. Somebody give me a yes in the. Good morning, Miguel. All good? Everybody seeing me? Everybody hearing me? Yes, yes. Let me know in chat, please. Okay, thank you very much. Okay, very good, very good, very good, very good. All right. Hi, guys. Good morning, good morning, good morning. Hope everybody's doing really, really well. Really excited to start this new week. The algo is really starting to, the indicator really starting to take shape. The latest version I have for everybody who is in my room is 1.8 dash alerts, which now has programmable buy and sell alerts. And I'll be going through all of this today in Pass the Prop mentorship. So if you guys, last day possible to join me today in Pass the Prop. This is a program where you get 3 months of live trading with us, full access to not just me, but Kathy as well, and all of the signals, all of our Discord, as well as my mentorship, all of it for like a 50% discount to what the number would be. Maybe I think even 60% discount. So really, really useful way to get both BK services and my coaching. And I'm going to go through the indicator with everybody in my coaching tonight with all of its permutations. But it's working really, really well now. We have you see, I have a pop-up here. It's now giving me signals every time we get a buy-sell signal. So I'm no longer kind of operating, in the dark, having to flip through the charts. We obviously have a third buy signal in the S&P. I took the first one over here. I could have taken the second one, but I was a little busy. Now, of course, our rule set says when we're trading, when we're scalping, we take the first two signals and then we just rest and wait until there's a pause, a change of trend, and a reset of trend. So now we have a third buy signal, which actually puts us into a fade mode, into a counter trend mode. So now we're perfectly happy to wait, see if we can get a red zone, another green zone, another red zone, a second red zone after a third buy. That would be our signal to fade, to sell the S&P. But if as far as it stands right now, you can see it. I've integrated everything with Trade Evade now, so you can actually see my trades both historically and hopefully in real time in most of the accounts. You can see that that I took the first trade here on the S&P as a trade, and we're going to be looking for obviously more trades. I am generally trading primarily gold. Here's gold. This was interesting, by the way, sort of. So this was a situation where I jumped early because I didn't quite see the buy signal appeared and then disappeared, and I took it a little too early. So I sort of took myself out flat, and then the buy signal appeared for real, and I took myself into a normal trade. Gold has been a very, very strong buy, but also a pretty good signal to the sell side here, because you see here we had 1, 2, 3, 4, 5 buy signals from 4 o'clock in the morning. So there was a really nice clean trend where we could have taken at least 2 profitable trades. And then we were patient. We could have taken this was, if you look at this, the way I trade, my methodology here is you take the first 2, then you sit there and wait until you get a double red. A double red would be this is a buy, this is a red, this is the second red. I would have been short here at 59. That would have been a great sell signal. Then you have the first sell signal, the second sell signal, and then you just wait patiently until you get a reversal or a buy signal. By the way, this buy signal, actually, this first buy signal would have stopped you out, because if you had bought the buy over here at 52.8, and the target is this right? Let me see if I can get bigger a little bit. No, the buy was over here. That's why I would have been a stop out. This 53.2 was the buy, and then there was a pretty serious slip. I thought. Hold on, let me do the math here. Um, oh, maybe you would have survived it. I thought you would have gotten. I thought you would have gotten blown out here. Yeah, maybe you would have actually survived it. But assume you got blown out. Assume you take this trade and you get blown out. What do you do next? You don't do anything until you get the second signal. And in this case, the second signal would have been here. You would have done this, and then I trade basically 3 times my original size. So I hope to basically recover the trade in one fell swoop. I do this because I have enormous amount of margin on my side. I trade so small. I could go 3 times, and I could even go 9 times my original size, and still come nowhere near any kind of a stop out on my prop account. That gives me, first of all, and then again, this is the way I trade. I trade very small, highly profitable, highly high probability trades all day long, and I accumulate a small but steady rise in my account. Like sort of, I want to show you kind of, if you want to understand my structure, let's go through like this month. Which one is the account? Right? So you see like the account just grows. There's a couple of pretty bad dips. The bad dips, frankly, are a function of my my over trading badly. And if you notice that, like sort of in the last week and a half, I've really gotten very, very steady. And that's because I stopped doing anything but trading with one contract as my starting size and not doing anything else, right? I'm just like not doing anything else. Now, the important part about the way I trade here is, first of all, you see that, the equity curve is very steady. But secondly, I never come close to blowing out my account. The flip side, the negative side of this, is it takes a long time to get to reach target. My target is 15,000, and it may take me a month, maybe even a month and a half to reach my target. But I'm doing this for 2 reasons. One, because this is the way I like to trade. In terms of my own personality, I find that I get very destabilized if I trade large size. There are people who love to trade large size and they press it, and they're really great at going for the jugular. I am the exact opposite. I am much better when I have slow, steady, small gains under control. But the other reason why this is a much better approach is when you're trying to get the account funded, right? You can certainly go, have a hunch, bet a bunch, get it funded really, really quickly. I've done that a few times. It's a lot of fun. The problem is that is completely non-viable once you have a funded account, because that's how everybody always loses their funded account, is because they're always going for that one big, large win. First of all, in the funded stage, they're not going to give you the money if you just make all your money in one trade, because they want to see consistency. The whole point for them is, they don't want you to gamble with the money. So they get a lot stricter in terms of how they want you to trade. And secondly, the market itself will just blow you up very, very quickly. So if you start with this approach when you are getting funded, you tend to, I think, have a much better mental approach when you go forward. I have a sell signal. I'm right now. It's about, what is it, 9:17. Right now is generally my pause time. Right, from around 9:15 to 9:40, I generally don't want to be taking any scalp trades. Not because they may not work, but because we're just entering into the pit open hours. 9:30 is the open for the New York Stock Exchange, and once we get into into that first opening rotation, there's just tremendous amount of volatility. If you're on the right side of it, it's great. If you're on the wrong side of it, you just get clipped out really, really fast. And no need for me to assume unnecessary risk. There's plenty of trades all throughout the day. I mean, if you just look at gold today and just simply followed my methodology from 4 o'clock onward, right? You could just see at 4 o'clock onward, right? The sell here, 52.6. You would have survived this because it's a buck and a half stop, right? So it's a buck and a half stop. I would have survived this. This is a winner. This buy over here at 54.2 goes to 54. No, this one you would have been stopped out. So one winner, one stop out, one wash, meaning that this trade would have washed out this win, right? So now you're +1. Then you're waiting patiently for a reversal. Now you're +2. Now you're +3 on the sell side. Now you're +4, right? Now you're waiting patiently for a reversal because now you have 3 sell signals and you're looking for a double green trade, which by the way happens right over here. So this is 1, 2, 3 sell signals. And what I'm looking for is a double green after a sell. So this is now a 4th sell, first green, second green, right? First green, second green. I'm long over here. This goes a little bit against me, like, what is it, 50.6 down to 50.7, 49. You barely survived this, and then this resolves over here for a +5. Or if you didn't, if this didn't wash out and you're +4, then you just simply wash this out to a +4 over here, and you're +5. So now you're +5 over here by 8:30. Could even be +6. No, you couldn't be +6 because now this is the third buy label. So you would have just simply been patient. So you kind of +5 on the golds from 4 o'clock. And if you look at the S&P, from 4 o'clock, you really didn't have much movement. But okay, so this was 90.50 +1, right? +1. This one I think you actually got stopped on. So you're stopped on this. The next trade here resumes itself +2. You're -3 on the buys. You're waiting for a buy to be redone. So it's +2 on the sells. This one washes away your buys, so you're even on the buys, right? This one stops you out again on the buys. So now you're waiting for this. You're +3 on the sells. Again, washes away the buys, so you're flat on the buys. You're +3 on the sells, flat on the buys, +4 on the sells, +5 on the sells because you're short over here and just looking for a point. +1 on the buys. See, I didn't start doing my buys here until a while back. +2 on the buys, right? So I think you're +4 on the sells, +2 on the buys. Now you're +6, right? If you're doing, just kind of give you an idea, you're doing +10, right? Accumulatively, that's $500. And I'm doing +10 on gold, +10 on the S&P. Now that's $1,000. And while you're getting this funded, that's takes a little while. But once you're in a funded account and you're doing +$1,000 a day, it doesn't take much. You're going to get, first of all, you're going to get paid out. The first 25,000 go to you completely. But even after that, you're getting paid 10%. So if you can consistently make that on a day-to-day basis, you're looking essentially at a $900 day over 3-4 hours worth of trading. And that's a 3-4 hour block of Europe Open to North America Open. There's the second 3-hour block, which I'm trying to figure out like what would be the right timeline. Probably about 8 to 12, which is a pretty decent block. But I also think there's a really good block. There's a really great block of 10 to 12. I started looking at the market, and I really think that if you're looking for Nasdaq, S&P, Dow, U.S. equity side, that whole 10 a.m. New York to 2 p.m. New York is actually pretty good block. I used to think, the conventional wisdom was that lunch hour was going to be chop, but ever since we've gone global electronic, if you look at the sort of a 11 to 2 p.m., there's quite a lot of really good movement. Certainly, for the kind of scalping that we can do, like for example, if I went yesterday into the S&P for this particular block set, right? Let's say, Sorry, I'm just scrolling back here. Sorry to give you guys. All right. So let's imagine I'm looking at the 10 to the 2 o'clock block. This is a +1. This is a +1. This is a +1. This is a +1. So now I'm like, +4. This is +5. Even this works. Oh, sorry, I wouldn't have taken this one. This is a third one, right? So it's +5. So this is a third one. So now I'm patient on this. +6. And that's it. It's like plus. That's still very good. You're looking at +6 in that very, very fertile area. And that's just the S&P, right? Now, if you're if you're trading the Dow, there's definitely opportunities. Same ideas, in the Dow. So we have another, and I have a scalp buy in the S&P right now, but it's 825, so I'm ignoring it. You see, by the way, how nice it is to have the alerts pop up. So I'm totally cognizant of all the signals. Again, if you guys wanted to get this, you can get it. You can get it either through my coaching program, or if you want to just try us out, here's a discount link to our service and get the discount. And of course, as always, everybody, please get the Apex accounts. Get yourself set up on these $250,000 accounts. Let me show you. So let's just show you yesterday's. What I consider to be actually a surprisingly profitable block of trading for what we do, which is the 10 o'clock to 12 noon. So here we go. +1, +1. I think this one fails. 52. No, this reaches it because I'm only looking for 10. So +3, +4, +5, +6, and then again, same thing. So now I have +6 on the Dow, +6 on the S&P. And if you're a true degenerate and you want to trade Nasdaq, right? And let's go to Nasdaq in this particular time frame yesterday. Which, as I said, I thought it's kind of surprising that this time frame is lucrative, but it is very lucrative in terms of giving us the signals. Where's this? Let me go into. I think I have to go into replay mode. Okay, yeah. So as always, Nasdaq will drive you crazy. But here we go. It started 10 o'clock, +10 Nasdaq, +10. So +1, +1, +1, +1. Now I'm +4, +5, +6. Right. Third one I don't trade because it's already a third one, right? This is interesting. So +6. This is a third one. Would I take? This is a second red over here, which is right over here. That actually works. +7, right? And that's it, I think. Yeah, and there's one more here at 1354, which is +8. So even Nasdaq. So Nasdaq is a $200 trade. Yeah, $200, right? It's a $200 trade. Nasdaq is a much more volatile trade. And this actually, for those of you guys who let's say there are guys in my room who just trade nothing but Nasdaq, right? And Nasdaq is kind of the perfect instrument for somebody who really wants a lot of volatility. So this is a much bigger profit, much bigger loss ratio, but still tiny relative to the account that you're trading. So this was what, +6 or +7? That's a $200 profit per unit. So that's $1,400. Nasdaq alone. Just focus on Nasdaq in that 4-hour time frame, right? Which is kind of very cool. I actually think that's probably the right way to think about it. You either kind of trade S&P and gold and a little bit of Dow, because all of those are relatively small trades and they're relatively low volatility. So, you don't have too much whipsaw. Or you just dedicate your capital in your account to Nasdaq only. Watch it like a hawk, trade it in those instruments, and then know that you're going to have much greater variance, much bigger volatility, but you also have a much faster earn, right? It's just a faster earn if you do this on Nasdaq. It actually makes me kind of think that what I should be doing, I may actually do this, is the way to do this properly is what you do is you dedicate an account, 2 accounts, the buy and the sell account, because you always want to be on two sides to make sure you separate your buys and sells, just for Nasdaq only, maybe I'll do that next week. I just don't want to do it this week because honestly, I'm trying to keep my focus in line. But it's actually like I think both psychologically, financially, logistically, that's probably the right way of trading, which is you either isolate to Nasdaq only as an instrument, or you could trade everything but Nasdaq, because once you bring Nasdaq into the mix into your account, it's going to pollute the hell out of it. It's either going to create huge wins for you and you're going to be super happy, but then it's going to blow you up, or it's just going to blow up everything that you're doing. Why the 250 Apex account over the more popular 50K account? No reason. The reason is just because if you want, so two reasons. You're absolutely right, Steve, that the 250 is a much more difficult challenge. On a 50 account, so people should kind of understand what the math is. On a 50 account, you got to make 3 and lose less than 2.5, right? So it's almost a 1-to-1 risk-reward ratio. On a 250 account, you got to make 15 and you can't lose more than 6.5. So it's effectively like a 2-to-1 or 1-to-2 risk-reward ratio. In other words, you got to make twice as much as you're allowed to lose. The advantage of that is the only advantage of the 250. First of all, I think Apex still continues to discount that it's really, really cheap. That they're just making it super cheap, so it's effective. But secondly, if you're trading the way I do, with sort of like a one contract entry structure. And by the way, sorry, let me kill the replay so that we're not losing signals here. We're 9:30. We're starting to to open up trades. So we'll be looking for signals now. By the way, so this is interesting. I could have traded this with you guys. I just didn't want to do the 9:30 open. The 4 buys. Once we go past 3 buys, now we're looking to sell it. So this is a red. This is a second red. This would have been a nice, easy fade signal, right? I could have easily taken this fade signal. I just didn't do it right now because we're talking, and we got plenty of time to trade post this. But what I lose? Oh, so you have just a bigger cushion. If you're trading with one contract, you can scale up to 3 contracts, even 9 contracts, and still never come into danger. At 50,000, you really can only do one single wash. So you do 1 contract, and then you could do 3 contracts. And also, I think this is the other thing is if you do 3 contracts on Nasdaq, especially, right? So what's the math on that? I'm losing 600, right? I'm losing 600 times 3. That's 1,800. The point is that if I'm doing 1 contract, 1 to 3, I can survive the 50,000, right? But if I ever want to wash away my losses, like on a second entry with 3 times the size, I'm basically I either wash away those losses or I blow up the account on a $50,000 account. So what that does is it doesn't give you enough. It doesn't give you enough operating room on the downside. Now you don't have to trade. I think it's kind of crazy to trade Nasdaq on a $50,000. I mean, it's not crazy if you sort of really, really focus and you say, I'm not going. If I lose 3, I'm just going to eat that and just try to make that back. I want to have like a day where maybe I'm 1 -3 loss and 6 or 7 + 1 losses for a net positive, which is the only way you could trade 50. But that's that's sort of like the answer. It's a matter of just how much operating budget you have for losses relative to the size. You can also totally change the game on a $50,000 account and just simply say, I'm going to trade Nasdaq at 1 micro position. But then you're looking for $20 wins, and it kind of puts you in the same situation where you're making a couple of $100 on a $50,000 account, and taking a month to get funded there. So it all depends on all this stuff. Just to give you an idea, on a $50,000 account, if I am trading the S&P only, S&P or gold only, right, which is a 50 risk, 150 loss. Even if I go 3 large, right, 3 large on an S&P to wash away my losses, it's only 450 loss. It's 150 times 3. So, and I have a $2,500 loss budget. So it's just, to me, the S&P is what you would trade on the thing. Oh, we have a sell setting up on Nasdaq. Let's make sure I'm going in my sell account. Excuse me, sell setting up on the S&P. Sorry, where am I? Let's look at this. I want to be trading from this level. So it's 5 seconds left. S&P. Join ask. Let's see if I can get executed. Nope, I'm not going to get executed. All right, I'm executed, but let's see if I get done now. I'm going to change my accounts to the 49 account. So I should have gotten executed earlier on this move, and it did go down to my target. This is a problematic trade. It's, first of all, what I say, I shouldn't be trading till 9:45. This is a trade that could easily retrace against me, and if it does, it does. I'll take the loss and I'll try to wash it away. So it wasn't, I'm just trying to take trades with you guys just to show you the process. It was not the best trade to take. For two reasons. I should have been executing it off screen, where I could have gotten into the trade earlier and then would have probably resolved it over here. I kind of got into it a little bit late into its retrace mode, so now it's kind of retracing on me, and we have to see if you can hold the buying pressure and then keep trading the sell pressure. So we'll see. We'll see if it keeps going here. Okay, so I managed to survive this. Now, the reason I managed to survive this is because I'm always trading with a very, very large stop, precisely to give myself a large margin of error. But there was a lot of error in this trade from just the execution point of view. Fortunately, when you give yourself a large margin of error, sometimes you can make bad execution trades and get away with it. So we got away with it on the sell side. Let's see what else is happening. I'm going to try, as I said to you guys, for Nasdaq, I'm only taking micro Nasdaq trades. I'm taking bullshit Nasdaq trades because both mentally and I have a Nasdaq sell signal. So we're going to take a micro Nasdaq sell here. Join ask. Okay, so I am in micro Nasdaq mode here, and because again, since I'm not dedicating an account strictly to Nasdaq, every Nasdaq trade I do is, is this a, hold up a second. No, it's a micro Nasdaq trade. Yeah, that's correct. Oh, I'm 3 large. Oh, damn it. Okay, it doesn't matter. So this is another good example. This was I had a larger volume setting early. You know what? I'm just going to get out of this trade. Close position. I took the position. So again, this trade worked perfectly fine as a classic, Nasdaq sell trade. For purposes of live trading with you guys, since I don't trade Nasdaq because I don't want it to pollute my general, P&L, my trade plan structure, I trade the micro Nasdaq because it doesn't, it's such a small contract relative to a 250,000 account. I could give a flying fuck about what it does to my P&L. But I do it because I want to show you the actual, mechanics. You get the trade, you get the signal. You always put yourself on the ask to make sure you can get the bid ask trade, and then you try to obviously get the 10 points. Would this have gotten 10 points? It actually probably would not have. Maybe it did. I'm not sure. But the reason why I got myself out early was because I'm supposed to trade 1. I had it set for 3 because I was washing away the losses from a prior. I was testing out like a small Nasdaq trade for myself, kind of as a practice for you guys. And I forgot that I had the 3 contract on there because it was just super fast on this thing. So now I'm going to set myself back up to 1 and do it. It's all, when you're trading, it's all a matter of having a trade plan, having the indicator, having a trade plan, having the execution, and then being prepared for it. And the preparation part is always the weakest part, because if you are not focused, or if I'm talking to you and I'm not really paying attention to what I'm doing, there are things I will forget. Like I forgot to reset this thing down from 3 to 1, that kind of stuff. As I said, fortunately, the most important thing is if you give yourself a large margin of error, both in terms of stops and targets and in terms of size, right? The larger the size, the smaller your margin of error, the quicker you're going to die, right? The smaller the size, the more the more you can absorb any negative market movement, come back and recover. A huge part of this particular scalping setup is actually really knowing how to use it over and over and over again. It's much more about hitting the forehand constantly, consistently every single time, or hitting your putt, for those of you guys who play golf, which I don't. Why do I separate the buy and the sell accounts? I separate the buy and the sell accounts for two reasons. Two reasons, or maybe three reasons. Well, I'll whatever the reasons, I'll give you the reasons. Reason number one is logistical. If you have a sell account, you will never, or a sell account and a buy account, you'll never flip yourself into it. Let's say you may be holding a buy trade and there's a sell signal, and you go into sell signal, and what happens in futures is your buy trade gets netted out. Like, in other words, you go flat the market, right? In futures, you're not allowed to be on both sides of the market. In CFDs, you are. In CFDs, you can hold a buy trade and a sell trade in the same instrument at the same time. You can't do that in futures. So the most important part is you absolutely want to avoid any kind of a mistake where you may have a sell signal and a buy signal, in the S&P at the same time, and you're in the same account. That's number one. Number two, sometimes the markets are really, really trending up, and every single buy signal is a winner, and every single sell signal, no matter how good my filter is, could be a loser because it's a fake out trade. And that way, at least one of the accounts really, really does well, right? And number three, that helps you feel confident that at least you're running one account properly. And you're building towards your goal. So it's sort of like those three things logistically, because of the way futures are set up, because psychologically, you want to be stronger, and because logistically it makes sense. So it's not difficult. We kind of get used to it. You kind of get used to just flipping accounts, and once you do, it's sort of relatively easy to manage it. Sometimes I'll make a mistake and I'll do a buy instead of in a sell account, and that's fine. Especially when there's nothing else on the opposite side. You just let that trade go. Usually it almost always goes to profit anyways. So you P&L it and just P&L it to that account. It's an artificial division that has very, very significant positive psychological and financial benefits. That's really what I do. Does that make sense to you, Steve? So we're looking here where things are today. Market's kind of flat. Remember, Tuesdays actually tend to be, sometimes they say a turnaround Tuesday if you have a sell-off Monday. But if you have a buy-up Monday, we could have a turn-down Tuesday. Tuesdays just tend to be the reverse of whatever is the opening trade of the week is. So since the opening trade of the week was relatively positive, we may have a turn down Tuesday instead of a turnaround Tuesday as the week goes by. Here's a good example of what I'm talking about, and why having this kind of a strong, intelligent trading plan absolutely helps you, right? So here's a sell signal in gold, right? In gold, I'm trading $0.50 target, a $1.50 stop. So I'm short 57.7. My stop is going to be 59.2, right? And it just goes right up my ass. Now, remember, I'm giving you an example right before the pit open. So it's a stupid example anyways, but let's imagine it wasn't a pit open. This was just sometime during the day. Sell signal is just simply wrong. It just goes right up my ass. I sell it. I get stopped out, right? Because I'm trading small, I have like one contract opening trade. I can calm down, assess, watch the next red zone happen after assuming there's no buy signals, and I get a next red zone. I could regroup, go 3 large here, recover the whole loss. Boom. Super fast, super clean. But it's because I have a plan A, I have a plan B, and I have a plan C. And having that in your mindset, very, very important. And all of it starts with the foundation, the indicator, which is generally super, super good at telling you where the buys and sells are. The alerts now, which give you instant information as to when you should be looking at ideas. The execution meaning that you're always trying to buy on the bid, sell on the ask. It's much better to let the trade go to profit and forget about let the trade go and not capitalize on a trade than it is to get a bad execution on a trade, right? Really, really important to get good execution. So I'm always going bid to the ask, bid to the buy, sell to the ask, and then sizing, and that's you kind of have like all those things together. It really, really puts together a pretty solid proposition. And you see that it just constantly P&Ls produces a really good profit curve for you. We're kind of quiet, nothing much going on. I see no signals here. We got the sell signal in the S&P, which we took advantage of. Nasdaq had a sell signal. Oh, there's a Nasdaq. There's a second Nasdaq sell signal. Now, here's the thing. I'm late to this. I don't know why this didn't pop, or maybe it did pop and I just didn't see the alert. Did the alert pop here? Log. Yeah, I guess 936. Is it? No. Oh no, it wasn't a sell. No, it wasn't a sell signal. It looked like a sell signal, but it wasn't a sell signal. That's the thing. By the way, this thing is only going to. That's the other thing is it's only going to alert you once the candle completes, right? So it was forming a sell signal, but it wasn't a sell signal. I was like, how come I didn't get alerted? Because it didn't complete. So it was doing its job properly. So nothing over here. YM. Here's a good example. The Dow had a big sell into the open. If you had sold this here 506, you would have been stopped out. You'd have just been totally eaten it. However, so you eat the Dow, right? First of all, you shouldn't be trading the market open, but suppose you do. You eat the Dow on a retrace, which is a very, very common trade. So you have a big move to the downside, market opens up, and then it retraces right back up there. You wait patiently until you get a second red signal. You get short over here on 3, boom, you're done. Super easy. 50, 40, 49. You're only looking for 39. It gets done on the first candle. Now now that nothing much is going on, so we're just my trading style makes so much sense. Thank you. It's I would love to say that it's just been an incredibly this was another. See, this is a sell. This was a nice clean sell earlier today, like at 8 o'clock. You can see it over here, 550 to 540, nice clean $50 right there in the S&P, in the Dow. I love the Dow and the S&P. It's just nice, clean $500 a day products, for this particular approach. And of course, you could obviously do more. You could also, if you're doing more accounts as you get better, you could double it. You could have 2 accounts do the same. You could replicate it through a copier and just do $1,000 per each account. It depends on your approach. But I think this is a really what's the word I'm looking for? Viable. See, a viable way of scalping, right? Question. Can you please explain where to set up the trading view? Alerts? Yeah, that's going to be, I'm going to explain that in mentorship. So, because the alerts and all the advanced capabilities of this thing, I'm going to explain that in mentorship. If you guys want to get into the mentorship, it starts today. So let me give you the link. Those of you who want to come join me, this will give you 3 months of mentorship and coaching, as well as all the signals and access to all the products that we have. Are we shorting on the buy or sell signals, or waiting for the reversal and then a movement in that direction below if short or above? Okay, so there's two types of trades, right? I guess the way to explain it better is kind of like if you think about the start of a trend and then the end of a trend, right? So at the start of a trend is when you have the first two labels. So the first two buy labels, to me, those are start of a trend. It's young. And anytime I have the first two buy labels, meaning that there was a sell before that, right? So if you go buy, sell, this is a trend, this is a trend, this is a trend, right? This is the beginning of a trend. So I'm willing to get long here, take two trades. Once I've done two labels within trend, right, whether two buys or two sells, I sit on my hands. I wait to see if the trend extends. So, it goes to three labels, right? It goes three labels. Then I start looking to go counter trend. The word in trading is fade. And the way I trade counter trend is I wait for the first red zone patiently, have it come back green, and then wait for the second red zone. It's only the second red zone that is my counter trend signal, and I would be short over here. Okay, that's how I would do. Can I still get the 3 months package for $3.99 and get all the bonuses? What are the bonuses? This comes with a lot of bonuses. I think we give you a course. I give you access to both Zip and Scalper, which means that you get access to Kathy's trades and my trades. What other bonuses were you looking for, Monty? Let me know. So everybody understands the counter trend mechanics. The counter trend mechanics come after a trend has been established for a duration of at least three labels. Like, so it sort of starts to mature, right? And then, once it starts to mature, I'm looking for a counter trend signal. But in the first two signals, I'm always looking for trend ideas. Right now we're just sort of very, very quiet. Nothing is going on, right? Look how flat the market is. Just really, really dead, right? No signals at all, which is fine. We'll look around and hang out. But those are the basic parameters of how I do this. Is that clear to you guys? Everybody kind of vibing on the trades? Nasdaq scalp sell. So I got Nasdaq scalp sell. It's kind of a bad sell. So we're going to go to shit. Sorry, my glasses are off. MNQ join ask. Okay, I'm short Nasdaq on a retrace. Let's go over here. It's my short account. Yeah. So I've sold my tiny little micro position. Pretty much above the sell. You see the sell label would have actually put me at 102, and I got myself at 107. Now, is Nasdaq going to just go up my butt, and possibly stop? Yeah, maybe. No big deal. Again, as I said, I don't trade the Nasdaq instrument because it's just a little too volatile for my personality. But I'm trading the micro stuff, so I could care less what it does. But logistically, this is a proper trade. It's a second sell. It's a second sell label within clearly a downtrend. Nasdaq, of course, is notorious for just creating a flush and then a move back up. So you very often get caught selling bottoms or buying tops in Nasdaq. But we're giving ourselves plenty of room to see if this thing can survive the retrace and then reestablish the downtrend that it's signaling to us, right? So let's see how it plays out. For now, it's the only trade around. By the way, guys, how cool is it that I was able to figure out how to visually show this on TradingView? Isn't this so much more intuitive in terms of you guys seeing the trade develop dynamically? Instead of just me putzing around with, we have an S&P sell. Okay, so now we have like a real sell signal. It's a second sell signal. Okay, good. So let's go to S&P. Join ask. All right, I'm short the S&P here at 74.75. second sell signal. This is, it's kind of like the 10 o'clock, maybe, a little bit of a puke job on Tuesday sell hour, or we're testing the bottom and we're going to just stuff the shorts. We'll see. But regardless of what it is, it's a legit signal for us. It's a second signal in a sell sequence. My target is 73.75. Can you still sign up tomorrow? Yeah, you can sign up tomorrow because all my mentorship classes are recorded. So even if you don't attend, you sign up tomorrow. But you can sign up tomorrow. You can get it done. Let's see. We're testing. We're clean. We're clean on the S&P. It looks like I got done on the Nasdaq as well, and the Nasdaq trade also came in. So Nasdaq gave me lots of breathing room. I took the Nasdaq. Is that so? Let's do a little polling. Let's do a little polling. This is I'm fishing for compliments. So just complete. Indulge me. Do you like the trading view integration for trades? Yeah, I'm definitely fishing for compliments, but I just really want to know, do you guys like the visualization? That's what I mean. Let me know. You don't have any experience with futures. Will this work for you? Well, yes, it will work for you because you're going to be trading on a virtual account. You're trading on a prop account. So it's the best thing in the world. You can't fuck up. Whatever you lose doesn't matter. It's just your entrance fee that's going to happen there. And that's why I really, really love teaching prop, because it's like trading on a flight simulator. You get to learn techniques, trade well. If you do a good job, you're going to get paid real money. But if you do a bad job, you're never going to lose any of your own money. That's why I love starting people on trades. So yes, in my coaching, I will show you how to use features. It's not that difficult. That you can see. It's once you master the software, all the software that we use is web based. It couldn't be simpler. And all this integration that I show you with TradingView and TradeOvate, that's all completely free and included in that package. And I'll show you how to set that up as well. So it's all really viable. My opinion on long-term viability of funded trading. Talk of regulation coming. Well, I think regulation will be good. Regulation will basically shake out people who suck, and people who are real will stay. And I think like with everything else, I think the business is very much here to stay. But between here, now, and there could be 2 years and $200,000 worth of profits that you could be collecting. So I will worry about that bridge when it comes. In the meantime, it's an incredibly asymmetric bet. $50 for $250,000 worth of notional value. I'll take that bet anytime. Does my indicator work with FX pairs as well? Not this one. No. I'm trading 1 minute charts. It's only futures that move. Well, let me put it this way. It works with CFDs. You could trade this on Nasdaq CFD, on Dow CFD. You could fucking make a fortune on this thing. So if by FX you can expand the word FX to gold, US 30, and Nasdaq, the answer is yes. If you want to trade euro with this shit, no, because euro is a fucking boring currency pair that moves 10 points a century instead of 10 points a second. Yeah, you can tell where my interests lie. But if you are trading, essentially futures through a CFD variant, you could absolutely do that. Yeah, I absolutely I don't do the TradeOvate executable. You can just I would download the TradeOvate web based. No, it works with CFDs for sure. I mean, you want to see how it works with CFDs, right? So this is the we're looking here at the Nasdaq, right? So this is Nasdaq, right? So this is the Nasdaq futures. So let's go to Nasdaq CFDs. This is Nasdaq CFDs, right? Just going to show you same signals, right? Winner, winner, chicken dinner. Winner, winner, chicken dinner. It's it's the same shit. If you want to go to US 30, which is my favorite CFD, look at this: winner, 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 chicken dinner. Right. This one obviously you get stuffed. You as I said, you go on the second trade over here. You're done. Here you had a oh I didn't we had a US 30 sell signal. I had did it show up on the Dow? Did the Dow give me a sell signal? Oh yeah, it did too. I didn't. So we had a US 30 sell signal, right? Which is the CFD variant of the Dow. So if I was short here, 150. Stop is going to be 180. Target is going to be 140. Boom, you got it done right over here. You got it done right over here. Yeah. So, I mean, US 30 is actually like I think one of the greatest CFD instruments ever for this particular thing. And yeah, you actually you made me realize something which I never thought about because we're so future centric these days that I haven't really thought about like what's the optimal way to trade this with CFDs. And there's so many people that trade CFDs, across the world. Like this works like a charm on US 30 with the same parameters that I would use. I would actually like if I was trading a CFD account, which maybe one of these, we're talking to a potential CFD partner, a prop trading firm trading partner. If they get their shit together and, we kind of organize ourselves, that would be, I would do the same thing. I would be trading that through it. A news coming. Somebody tells me 10 o'clock news is coming. What's the news? Let's go see what's on the news. Financial Juice is my news source. Consumer confidence 90. Really? Fuck. Wait, is that right? Holy shit. Seriously? Wow. That's a big miss. Wow. Hey, look at this huge miss. 104 forecast, 98.7 on consumer confidence. Man, what's up with people? Are we all going into a depression? Wow, that is negative. That's super interesting. That's shockingly bad. I'm really surprised, guys. I'm really, really surprised by this. Because, maybe maybe I'm living in my limousine liberal la la land, but it just doesn't seem like the economy is that bad. But that is a bad read. That's surprising. Not much of an impact on the market yet, but it is diving. I mean, the market is kind of now. The market is like. Remember, I said to you, turnaround Tuesday is going to turn. It's going to turn into turn down Tuesday. We may be in that play in that phase. So, by the way, you can see what I've done here. I took the first sell, I took the second sell. Now it's really, really tempting to say, oh, we're going to be selling down 1,000 points. And we may very well be. Like there's absolutely, if you're a long-term trader, you absolutely could milk this for 10, 20, 30 S&P points. It's just not the style that I do because I have a certain disciplined approach. I've done my short trend now. So unless I get a new buy label and then a fresh red sell label, I'm not going to be doing any more sells. I'm going to be just simply waiting here patiently, looking for a third sell label, and then possibly looking for a counter trend move. Who's surprised, by the way? All right. So who's the asshole that voted no on my trading view? No, I'm just kidding you. That's fine. I'm actually here. I want to poll you guys on consumer confidence. I want to see if I can phrase this properly. Let's just make it binary. Okay? Because this is really because I'm so surprised by how bad this poll is. Are you confident? Oh, this is what I want to ask you. Just a sort of simple question. Are you confident about the economy in 2025? Just a yes, no. And I know that this is a global question. So wherever you are in the world, it's about your own economy. So obviously we're U.S. centric here, but if you're in Europe, tell me. Just it's a yes no question. I'm just curious. Vote up, guys. Give me let's see if you guys can put that there, because it's fascinating to see where everybody's thinking about it. Yeah, I mean, I know the Fed went 50, but like I'm just talking about like right now, I don't see people getting fired left and right. I don't see demand collapsing. So I'm just sort of really surprised at a sharp negative reading. But it's clearly being reflected now in equities as we start to really pull off. I mean, Nasdaq here, by the way, Nasdaq is just dropping through that key 2000 level, right? This was another trade. If you guys want to have fun, is the round number run. So you sort of like Nasdaq is going to take the round number always when it gets close on the future side, and generally it kind of like goes 10-15 points through it, right? Then it bounces back and then it tests it again. So if this thing just kind of, I think Nasdaq is going to, if I'm just playing around, not trading my setup, is going to go through 80, probably 50 before it finds any kind of a support here, and most likely. If we're gonna really peel off, it's gonna be 19,900 before there's any kind of a reasonable bounce that happens. Vote up in the economic sentiment poll, guys. It'd be interesting to see how you guys feel relative to what the numbers came out. What happens after the 3 months? It will renew, and if you don't want to renew, then then you won't be part of the group. But if you want to renew, you'll be part of the group. So it's essentially a 3-month 3-month coaching session. If you want to be more in coaching, you can do that. If you don't want to be in coaching, you can just be a member. You can renew to like a regular membership, or you could just go trade on your own. So triple sells on all these. Is a triple sell on? No, just a double sell on this. Gold is just doing nothing. Look at gold. Gold is just flat as a pancake. Nothing going on with gold. I think triple sell on double sell on the Dows. So kind of just chilling and willing. Not much going on here. Anil, where are you from? Actually, so here's what I want to know. This is a little bit more granular, but I'm actually curious. Oh, look at this. So this is kind of interesting. You guys are kind of pretty even. It's kind of like the political race in the United States of America. It's about a 49, 51 race. People are a little bit less confident than a little bit more negative than confident about the economy in 2025. But not just a sort of an even sample, which makes sense. I think that's a fair assessment. It's kind of a 50-50 bet right now. So I'm going to end this poll. I want to do one more poll with you guys because I'm just curious, because this is something I'm curious just from a logistical point of view. I know a lot of people are starting to ask us about this. That's why I really want to find a good partner. But I'm trying to figure out how to ask this question. This is prop only. Prop only. Right? I'm just only for prop for people who want to trade prop. Prop only. Do you prefer CFD Forex? This is going to force you to choose. I know some of you may be trading both, but I just force you to choose because I'm just interested. What do you guys like more? Because obviously we're trading futures, but I'm curious to know what you guys like more in the poll. And even if you don't trade prop, the question is, what would you prefer? If you did trade prop, what would you prefer? So give me some votes. Let me know. Triple sell in the Dow, right? So this is kind of like, is it triple sell in the S&P too? No, triple sell in the Dow only. Triple sell in Nasdaq? No. Yeah, triple sell in Nasdaq too, right? Okay, so now we can have a little bit of fun on counter trending, right? So we got a triple sell meaning it's, we got 3 labels in a row one way. So we've got a triple sell on Nasdaq, triple sell on the Dow. And if we're looking for a counter trend move, right, we're looking for one green, then a red zone, and a second green. If we get that kind of a combo, we're going to go long the Dow. If we don't get that combo, we're just going to stay very patient and not counter trend anything. So the fact that we're going into the long accounts means I'm going to set myself up on the long side. I'm just going to off screen here, go into my long accounts, and hang out over there. We use GoToWebinar. The training happens in GoToWebinar. I'm sorry. Fall allergies. I'm sorry, guys. So we use GoToWebinar, and then we use Discord for chat. In training. So that's a standard setup for us when we trade privately. Okay, so the nice little V-shaped recovery in the YM. What's the Nasdaq doing? Nasdaq is green zone. So this now it's tempting to say, oh, I have the candle in green zone. I want to get long here, and sometimes it works. Sometimes you get a nice clean V-shaped bottom, and it totally works. But sometimes it's not good enough. Right? For us, as I said, the way we trade within our trading plan, we want it to be almost always. Almost always is our metric for how we want to measure our trade resolution. So if we're going to look for much higher probability resolutions, we want a double confirm, because very often you get the green move and then another red move. It tests the bottoms pretty seriously. I'm actually. While this is, putzing around, going to be a couple of minutes for us to see. I want to see what the reaction is of the market here. No. Yeah, this is interesting. This is the reaction to the event. I like what they're doing this on Financial Juice here. Interesting. Yes, of course, we'll be teaching risk management. Risk management is a key part of the trading plan. And you guys get an idea. I mean, you get a hint of the kind of risk management I'm doing just by watching my own trading plan, evolve here. So 41.59. That's interesting. Interesting. A lot of people like to trade CFDs, which is totally fair. I get it. Just gotta find. I'm gonna find a partner I really like, and I think we're gonna do a CFD product when we come back in November. Okay, so where am I on the YM? Okay, so here we go. It's kind of interesting. So here's the Dow, right? We're in a counter trend possible setup. So I have a triple sell, triple red sell. I have a green zone. I have a red zone. If this thing, red, and then it goes green, the next time it goes green, I'm a buyer. Unless, and this is the key thing, unless it prints another sell label. If it prints another sell label, that's a momentum sell. Then I have to start the whole cycle again of a double green. I have to look for a double green cycle. This is what keeps me generally disciplined on all of these approaches. It keeps me from, making too many errors. Is it 10:15? Okay. Now we're in the red zone, right? And as long as we don't get a fourth sell label, which will then, make me reset my whole reversal setup, into a free mode. Oh, I had a buy signal in gold. Why is this not, am I not getting, am I not getting alerts? What's going on with my alerts here? I feel like, wait, alerts, log. Why didn't this pop up? There was I had to go buy. They just did not pop up. I don't know. Maybe I dismissed it. I don't know what happened. Let me see if it came up on my. Yeah, it did come up. I was talking. I guess I must have been talking 7 minutes ago. Okay. You know what I'm going to do? I'm going to put it. I'm going to turn on my phone so that my phone pings me as well. If my phone pings me, then I can hear the alert. Because if I'm using the desktop, it may that may play around. So here we go. I'm just waiting to see if the Dow gives me a sig. This was a nice clean buy signal here. It would have been a bit of buy here, half a point would have been easily made. Nice clean one. S&P is a double sell, so there's nothing to do anything here because we need a triple sell to do this. NAS is triple sell going into a second red zone and could possibly go into a fresh buy zone. So what I'm actually looking for is, and I'll put the Nasdaq on my other chart so I can watch it from both sides. What I'm actually looking for is either one of these instruments popping into the green zone, getting above the 8-period SMA, which would give me a legitimate counter trend buy signal. The coaching sessions are always held at 7 p.m. So it'll be 7 p.m. on Tuesdays. Hey, Tommy, how are you? Thank you. Tommy, you trading Nasdaq today? You doing anything on Nasdaq? We haven't shorted anything now because I have, I shorted Nasdaq earlier on the scalp side. Right now, I'm actually looking to see if I can get a buy signal in either NAS or the Dow. So far, nothing much going on here. I mean, it's a slow day, guys. You can see, we're kind of having a little bit of a hangover. I think it's going to be turned down Tuesday, where we're probably going to go down 0.5%, maybe even 1%. I mean, this is a shitty consumer sentiment number. Like, this is kind of a thing that's going to sting. And I think the more people think about this, because remember, the market, if you think about it just from a fundamental point of view, because obviously we don't trade fundamentals, but directionally, fundamentals is what's going to drive equities. So everybody's super happy that you have low interest rates, right? Which is fine. So valuations means you can go for higher PEs. But remember, the second component of equity valuation is earnings, right? You need to have earnings growth in order to, it's already very, we're like at 22 times forward earnings. The median is about 18. So it's already 4 times more than it, or not 4 times, but four earnings more than it should be in terms of, median valuation. So that assumes that you're going to have like really, really strong earnings growth, which means the economy continues to grow. But if the consumer is really weak, you're going to have negative comps instead of positive. You have negative comps. This blows up the whole equities to the moon scenario, even if interest rates are low, because low interest rates but compressed earnings just mean compressed earnings, price earnings ratios. So so that sucks. Hey, Karen. So Karen is my. Oh, by the way, it's a siren. It's like the first one of the day today, right? Congratulations, Karen. Let's give everybody Karen a nice big celebration. Karen is one of our great members. And let me give you a celebration. Where is it? We give you a rocket red moon. Karen going to the moon. Good job. Good job, Karen. She just passed the 250. and she she loves to trade the Nasdaq. So using a lot of these, she actually uses like the indicator that I showed you here is the nice cleaned up final version, but you can actually make it much more personal when it has lots of configuration components underneath it, and Karen uses the kind of raw version of this indicator to really trade the Nasdaq or momentum. So good for her. Can we use the Heiken chart? No, the Heiken chart, I don't. I've looked at the Heiken charts. The problem with the Heiken chart is that it gets. Oh, here we go. All right, so let's. Where am I? I'm on the long side. Sorry. Alongside, I'm going to try. Does the YM go? Yeah, join bid. I'm on the wrong one. Exit. Where's my YM? Oh, I don't have the YM. I'm sorry, guys. Okay, I'm not prepared for this trade. Again, I was not prepared for this trade. That's my fault. YMZ. I thought I had the YMZ. In this one, I did not have it. Okay, so I am not prepared for this trade, so therefore I'm not trading this trade. Okay. Sorry. So the trade would have been long here at 506, and it totally went, 16. I would have made my trade. I just did not have. I thought I had the YM. I did in my trade of 8, but I did not. So okay. I didn't have it on my long count. I had it on my short. I had it on my short account, but not on my long count. So okay, I'm sorry, guys. I told you we're kind of stalking this trade, and then I sort of goofed on it. We still have the possibility of a Nasdaq trade. So we have we can stalk the Nasdaq trade, and we can do that off the micro account. Once I have myself set up. Sorry. So as you can see, you're going to miss 1,000 trades. That's the beauty of my trading plan. My trading plan basically doesn't depend on you being right every time or just being right once a day. I'm not a sniper. I am a sprayer, right? I give myself lots and lots and lots of chances during the day to succeed instead of just waiting for that one chance. Because as you can see, sometimes you can do stupid things and just not be prepared. Like I wasn't. For some reason, I had the micro, but not the other contract on this particular long count. So now I do. Now let me make sure that I have it set up too. Oh, Jesus Christ! Now I have to set up my settings here. Let's do this 10. Okay. Yeah, okay. Sorry, wasn't set up. You can trade Nasdaq micros only, of course. Karen, good job. Everybody is really persistence. Any customer support stuff, I'll be happy to deal with you on Discord, or just message me on Discord or on email, and I'll make sure that I set you guys up. I don't want to bore people here. People here with customer support stuff. All right, we might have a Nasdaq setup here. Remember, I'm looking for a second green zone. If Nasdaq goes second green zone, we're going to try and make this trade happen. But if it's not a second green zone, there's no turn in Nasdaq, right? So Nasdaq may go down further. So far, nothing going on over here. Very slow day, as is expected. But I hope you guys, got some good ideas of, number one, just the techniques of the scalping that we use. Number two, the kind of trading plan that I'd like to put in place. Number three, the trade hours. Like I think so. And by the way, here we go. So this is what I'm talking about. Fourth sell label. You see that on Nasdaq? So what happens to me? Now the whole reversal setup goes out the window. Now I have to wait for two double greens in order for me to even consider. And why do I do this? What's the rationale behind this trading plan? Well, because now we have fresh selling momentum in Nasdaq, which means that whatever turn we have is going to be very, very timid. And what you really, you really want to be confident that the sellers are done. They're not done. They're still puking it. They could even make a fifth consecutive label. Like I said to you, I think the trend, if I was trading fundamentally, the trend was pretty clear, obvious to me that it was going to be a downtrend. And if you wanted to kind of swing yourself to the downside, this was a very, very clean fundamental, trade idea. I think we may sell off. We may sell off a percent before the end of the day goes. If the market really decides to take off. So we have a scalp sell over here that shows up. Okay, so my alerts are showing up. I just wasn't paying attention. You can email me whether you're a customer or not. You can just always reach us at contact@bktraders.com. Okay? You can always email us there. Look at you guys. Wow. This is a really interesting poll. So, wow. Interesting. This is really interesting poll. Thank you very much for voting. And anybody else who wants to vote in this poll, again, I'm not asking whether you trade prop only. I'm asking your preference. I'm actually surprised, really, really surprised at how many of you prefer the CFD Forex. Interesting. I mean, I'm not surprised because probably many of you are non-Americans, and that's a much more comfortable instrument for you to trade. But that's good to know. Thank you for putting in the votes. A few of you add some more votes if you got them. I'd love to know. Yeah, today is kind of a slow day, so we get a chance to to discuss more interesting things. Yeah, Susan, there's a poll. There's a poll. If you vote in the poll, that would be really valuable for me. It's right up in the chat. Okay, so let's do final set of links. Right? You want my coaching? Here's the final link that starts tonight. You can lock down that. If you want to just join us for 1 month or at a big discount, here's a link for that. And obviously, be sure to get my friends at Apex discount. Somebody just messaged me that they were very grateful for the discount because they got a huge discount on that $250,000 account. So yeah, absolutely. Get all of that. And hopefully we'll have even better deals for you as more partners come join us. So overall, not a bad day for us. Let's take a look at the P&Ls. I mean, nothing extraordinary because it's just been a slow day. But we're going to look at the P&Ls for, let's just say, this week because it's really been quiet. So which account is this? I forgot which account this is. Shit. Now which account is this? This is the short account. This is the short account. This is the sell account. So this is this week, so far this week, on the sell account, right? 254. And then, but nice and steady. And this is the long account. Let's see what we did this week on the long account. This is just this week. The week is only halfway. So, not much, but you see it's very, very steady, steady green, right? Steady green. And that's the key thing, and as the week grows, we'll hopefully get this up to about, 1,000, 1,500. In a steady green, and the other one the same way, and we'll go from there. First green, see that? Not a trade for me. Not a trade. First green zone. Not even a first green zone on this thing. Not even moving. What's the S&P doing? S&P doing dick all. Gold is doing dick all. Nobody's doing anything. All right, that's fine. Remember, markets can change on a dime. I gotta hop, guys, because I have a meet coming up. So but I'm glad you guys, you guys enjoyed it. Really cool. I mean, let's just again review. Where's my? Which account is this? I forgot. This is a short account. Did I have any short trades? Let's just review my trades here. Yeah, these are my short trades. I only took a few tactical trades. So this is my short. This is my short account, right? This is the short trades on gold. Obviously, as I said, I'm an S&P hound, so these are two quality short trades on S&P. Did I take any more S&P trades? No. Did I do anything on micro Nasdaq? Yes, short trades on micro Nasdaq over here. Did I have any more short trades on Nasdaq? No. And then Dow short trades. You can see, yeah, one quality short trade here. Just a buy sell short trade, and then there was nothing else on the Dow. Now we can look at the long count just to give you an idea what I've done so far. Let's go to the long count. Okay, so this is the YM. I don't think I have anything on the long count in the YM. MNQ on the long count. Here's the so this is a good example. This is what I'm talking about washing away the losses. So legitimate buy, I get stopped, right? I get stopped. I wait patiently until I get a secondary green zone, 1-2 green zone. I'm long here. Boom. The trade works to the upside. And then S&P longs. Do I have an S&P long? Here's a nice, sell buy, nice quality long. I could have taken this long, but this was right before the market opened, so I didn't want to do any more longs. That would have been good. And then finally, gold. I think I had a couple of gold longs. Here's a gold long over here, and here's a gold. Oh, this was just my mistake. This was a mistake execution, so that doesn't count. Do I have any more gold longs? No, that's pretty much it. So that's it. You see, I wasn't super active today. I did a little bit of activity with you, but they all worked. I mean, they were all pretty much, they were all net positive, and we could have done a little bit more if the market was more cooperative. But overall, I think it's good. I like being able to have all of this marked on the chart, so you guys can really see the history of the trades. I think hopefully it helps you understand techniques, right? Otherwise, it's Tuesday. What else can we say? Are we doing anything? Let's see if Nasdaq is doing anything. Oh no! Look at that. Was there a triple sell on the? Look at that! Finally, a triple sell on the S&P. So what does this mean to me? This means that tempted as I am to want to short this, I'm not going to short this, but I'm going to watch it like a hawk for a second, for a reversal entry. If I get a second green entry here, one green zone, red zone, one green zone, then I'm definitely going to do a reversal trade on the S&P. So you can see every 15-20 minutes there's always a potential trade. You spend a couple of hours doing this, it adds up, right? It really adds up. And the beautiful thing is you can kind of step in, step out of it at least 3 times during the day, between 4 and 8, between 8 and 12, or between 10 and 2. This is all in New York Times, when you have really good quality times to find all these trades, especially when you're doing several instruments in a row, right? Okay, guys, thank you so much. Been a fun day. I'm really trying to get all my technology in order here. Here, let's one for the road. Let me have fun. One fun thing for the road. We're gonna do this in honor of Karen. Karen, I'm doing this in honor of you. This is for Karen, and her celebration of her 250,000. Where's my thing? Here we go. Hang on. There we go. Karen, this is in honor of your 250,000. Also, this is in honor of your 250,000. Also, this is in honor of your 250,000. So anybody who passes a test in my group, we're gonna do this. This is a new tradition. We're gonna give them the fireworks salute. Sounds good? That means every day I expect to be giving fireworks salutes to motivate you guys. Sound good? All right. Okay, my friends, thank you again for everything. Everybody have a wonderful day. I will see everybody tomorrow. Same time, same station. We're gonna rock and roll again. Everybody enjoy. I'll see you guys a little bit later. Bye bye.